was chosen. I'm tryna buy the past out bar when I was open. I'm grinding for this, I know I was chosen.
Great rising individuals. I'm Taji. Today I'm going to be sharing my phase two of my evaluation. I'm going to keep it short, sweet, and simple because it's only about 4 trades. Shall we begin? So here I have my trading journal for phase two pulled up. Like I said, it's only about 4 trades, and I have the first trade pulled up. The honest to God truth is, starting out my phase two, I was in drawdown nearly 3%, as you can see here. In the first trade, I lost 1.5%. If you have read the ABC Trading Journal, you would know that in this book, one of my rules is not to risk more than 1%. Now, this is one of my rules. I'm not saying you have to follow this rule to be successful. This is the rule I follow. I've seen a legendary trader by the name of Q Banks mention how 1% is for suckers. And when you're trading a personal live account, it's different parameters than trading a funded account with a company, because you have to follow rules. So not only you following their rules, but you have to create rules for yourself to follow. That being said, a 1% risk per trade is a rule that I follow. And I broke that rule. That's why I mentioned it on this trade. So we broke one of our rules, but by us having a stop loss, which we mentioned in the last video, which is why I encourage you to watch the first video on the phase one evaluation. Having a stop loss and having a take profit is very important tools to have in order not to only not blow your account, but to cut your losses short and trade another day. And so in this particular trade, I only had 2 confluences. I had a failed swing and an order block, but I like to go into more into depth about when to get in and when to get out. So as you can see here, let me blow it up a little bit. Price shot straight through my entry, right? And this is about, if I could gauge, this is probably about 3 or 4 o'clock in the morning, right? I was asleep. When I woke up, I was watching price continue to rise, going into U.S. market. Now I did see price get to TP1, right? And another one of our rules, which you watch in the phase one evaluation, is when price gets to TP2, we move our stop loss to break even. When this case, I did not do that because price did not close above TP2, which means that I left my stop loss at my original stopping point, which is here at the bottom of this gap fill. So as you can see, price went shot straight through TP1, got to TP2, failed to close above TP2, and started to reverse. Created a reversal candlestick below TP1 and started to go the other way, and it stopped me out. Now, I thought that price was coming back to this gap fill to retest and was going to bounce back again, but it did not do that. And the reason I mention that is because, as you can see here, I took an exit. Now, it says I took a partial exit here, but I actually took a full exit. I just took a partial exit a few pips below me closing the rest of the trade, because I sensed that price was going to continue to fall because it was going to deliver to price right here and fill an imbalance, which we've also mentioned in the previous video, imbalances. Now, by me having a visual of how much money I was losing, I decided to go and get out so I could trade another day. And in the end, I lost 3.2% total. Yes. So first, straight out the gate, phase two, I was down 3%, 3.2%. So that was about $3,200 loss. And the reason why I'm going over this trade in depth is because I broke my rules. I remove my stop loss, and unfortunately, by me removing my stop loss, I lost more money than what I was supposed to lose. Remember, I'm only risking 1%. So if I'm risking 1%, and according to this trade, I done lost 3.2%, there is some type of error, and the error is I remove my stop loss. So traders, whether you're a beginner, intermediate, advanced, learn from my mistake so you don't make that mistake. Let's move forward, but we don't want to take all day. Also, I risked about a 2.5 lot size on this trade. Let's do our pre-market entry and post-market analysis for this particular trade, because this was a significant loss. I think this is our only loss too. It was just a significant one. Move myself together. So let's blow it up one more time. Well, I don't have to blow it. I can leave right there. One, where do you see price action in the higher time frames? Price is creating new higher highs in the daily. If you were to go the trend, where? Bull. 3, are there any reversal candlesticks in your zone? Bullish engulfing inside the bearish breaker order block. And that's it. 4, where are 2 or more time frames in synchronicity with the trend? The monthly, the weekly, the daily, the 4-hour. 5, do I have a confirmation? Yes. 6, did I wait for a retest? Yes. Entry, what is your risk reward ratio? 1 to 3. How much do I plan to earn? 3,120 and risking $1,000 and $1,005. 3, which session did you enter? London. 4, where's your stop loss? 129.750. 5, where's your take profit? 135.75. 6, why are you taking this trade? On the designated day and broke our all-time high for the year. 7, did you use any indicators? Sessions. 8, give me 3 confluences: imbalance, fail, swing, order block. Where's your entry? Excuse me. Make sure we're on the right one. Yep, we're on the right one. And post-market analysis. Did I follow my plan? No, I risked over 1% and I did not close at break even. So before I continue, there's 2 things I want to mention. One, if you ever see a trade like this where it doesn't close above TP2 and price starts to reverse, set your stop loss at TP1. Because in the last video, I did mention you want to let price breathe, but with it forming a candlestick that was a reversal candlestick, you want to cut your losses while you still can. Because I could have definitely got out at break even and not took a significant loss at all. Because I had enough time to get out, but I held it anyway. And that was costly, a very costly mistake. And the second thing I wanted to mention was, let's see. I went over the entry and the take profit, but I also wanted to go over no, I did go over, if I had just simply broke even on the trade, that's what I was going with it. If I had simply broke even on the trade, I wouldn't have lost any money. But by me holding on to the trade, I lost money. And I also wanted to mention that if price fails to close above TP2, just go ahead and cut your losses in profit. Okay, let me continue. 2, what did I do well? I closed before price fell below my daily loss limit. 3, where can I improve in the future? No more than 1%, sir. Says it right there. Okay, what did I learn? Read your rules before you enter, or else. 5, did I prepare properly? Yes, I made a clean entry. 6, why did I take this trade? CPI Tuesday and Wednesday. What is it you are seeing? Bullish engulfing towards the 88% level. Where did you exit? 129,305. So this brings me to my last point about this trade, because this trade was a slow moving trade, and I really didn't have to lose as much as I lost on this trade, because I did trade news, and I did know it was a CPI, and I did know uh that price was going to get to this point. And then reverse, because it was just news, it was just rallying up, and it was going to reverse because it was at an all-time high. It was at about, I think this was when it broke 130. It was towards breaking 130. It was really close to it, but it came back. So let's move on to the next trade. Even though I lost, it was very, very insightful experiencing that trade. So next we're gonna go to, yeah, actually another GU trade. Here we go. So this one, it looks like we had three confluences, being that one was a fair value gap, two was a failed swing, and three was an order block. And so on this trade, we only earned about 0.7%, which is $721. But the reason this trade is so significant is because it it delivered back to this fair value gap, is what I'm wanting to say. So price touched this point, and that's all we was looking for. And we got out when price got near TP1. So about right here's when we exit. So it says partial exit here. So the first trade I probably lost like maybe a couple dollars. No, this wasn't the account. So this one I didn't lose anything. It looks like I only earned about $721. I took two separate trades though. And I held it for about 2 days. And as you can see, during this 2 day period, it just consolidated. It was up and then it was down. And finally, it just got to TP1. And I just got out. Because it was consolidating too much for me. It wasn't really doing what I wanted it to do. And usually GU is straight up and down. This wasn't the case. We can go over this trade as well. There's one. Where do you see price action in the higher time frames? Price created a higher high and reverse, which is here, and started a reversal trend. Two, if you were to go with the trend where bear, and like we went over in the last video, bull is up, bear is down. Three, are there any reversal candlesticks in your zone? Bearish engulfing in the daily. Four, where are two or more time frames in synchronicity with the trend of the daily and the 4 hour? Do I have a confirmation? Yes. Fibonacci. Price was headed towards the 4 hour 50% Fibonacci. Did I wait for a retest? Yes, obviously. There's a lot of consolidation here. You did wait for a retest. What is your risk reward ratio? 1 to 3? How much did you plan to earn? So we plan to earn about $1,700 on this trade. So like I said, when I take a loss on a trade, which we took on the previous trade, I only risk a 0.5%. So if I risk 1% on the trade, lose, then the next trade only risk 0.5 lot, because it's basically like a punishment. Like, since you didn't do well the first time, let's scale it down and let's really focus on finding the higher probability setup, because the setup is more important than the lot size or the amount you're getting in. It's the probability, the high probability setup, because you want the high probability setup to be 70% your favor of a 1 to 3 risk reward ratio. If you're risking 1% to earn 3%, then your risk reward ratio, your win rate should be at least 70%. Okay, I got it out. Spit it out. We're gonna skip where's your stop loss, where's your take profit? Which session did you enter? Tokyo. 6, why are you taking this trade? Price tap to 50% field. Did you use any indicators? Sessions. 8, give me 3 confluences. Looks like we have fair value gap, imbalance, and order block. No, imbalance, failed swing, fair value gap. 9, where's your entry? We did 2.5 lot, so basically a 5 lot. At 1.29272. Post market analysis. 1, did I follow my plan? No, I did not move my stop loss to break even after close above TP1. So I had to close this one manually. What did I do well? I did hold my trade over the weekend and exited in profit. So I exited this trade on like a Monday. After holding it over the weekend, price opens on Sunday, but doesn't really move until Monday. Where can I improve in the future? Allow price to hit my parameters before I exit and enter. 4, what did I learn? Make adjustments as needed, but do not jump the gun. Break even is a win. I repeat, break even is a win because you just took a risk-free trade. You didn't win, you didn't lose. It was risk-free. You just practice, and you didn't lose money on it. So it's a win. Okay, 5, did I prepare properly? Yes, I had multiple confluences. 6, why did I take this trade? Bearish engulfing in the daily. Excuse me. 7, what is it you are seeing? Price action bearish to begin the week. 8, where did you exit? 129, 150. So that was a good trade in itself. We're ready to move on. Now we're going to go over our GJ trade. So I was watching this trade like a whole. I'm not even gonna lie to you. I remember being at work and it was about, I get off at that point, at that time I got off at about 7. So I was watching it all day, of course, but at about 3 or 4, as you can see here, price closed above TP1, reached TP2 but failed to close, and then reversed and came back to TP1 and kind of went below TP1. Now at this time when I was at work, I had my stop loss at TP1, but I took it off and moved it back to break even right in time because, like I mentioned in the previous video, which I keep referencing, which I encourage you to go watch, I gave price time to breathe, room to breathe, and in return, it rewarded me by hitting the 1 to 3 that I was aiming for in the first place. So at first, I had it at TP1, but I went back and read my rules, and I moved my stop loss back to break even because I didn't have a closure above TP2, so I didn't even have a reason to have it at TP1. So I moved back to break even, and in return, I hit my 1 to 3. And on this particular trade, we actually earned 5.6%, 5.5%, which is $5,634. This was my largest trade that I've ever taken. This is why I was so excited to share phase 2. And this is not my favorite trade. The next one is my favorite trade, but this one is my best trade financially ever. It took a certain level of discipline. for me to hold this trade. This is why I like to go over it a little bit. So let me scale out. So as you can see here, this bar right here represents a bullish order block. A bullish order block is formed when prices in a bull market, on a bull run, followed by usually it'll be a bullish engulfing here. So with this being a smaller time frame, it'd be a little bit more difficult to see. Actually, I have the real chart pulled up. So let me pull the real chart up. I actually have this trade pulled up here. So I have it scaled down into smaller time frames because I wanted I wanted to show you the bounce. Remember, I just mentioned this was a bullish order block, correct? Price came all the way back. As you can see here, price came all the way back down and became what? Like we mentioned the other day, a breaker order block. So with us knowing that it was a bullish order block and it came all the way back to this order block, this area of liquidity, we knew price was going to fall below that area because it didn't have enough momentum to continue its bullish pattern. So with that being said, we decided to capitalize on that and enter. So we entered a short position. And it was a very, very tight trade because as you can see here, we almost got stopped out. But we held on to the trade and we allowed it to run. When it got to close above TP2, that's when I moved my stop loss to break even and it made sense. You can see here, this was like 1, 2 o'clock. So I moved my stop loss. Like before I went to work at about 9 or 10 o'clock, it was at about TP1. But some told me like when I get to working, it's gonna come back here. So I just went ahead and moved to break even so I could just work in peace. And I was still looking at it throughout the day as I was serving customers. Like, what's it gonna do? What's it gonna do? So when I finally got off, by the time I got home, took a shower, hit my TP. It was beautiful. It was beautiful. And I just wanted to share here today. Like trading is very, very, it's like 80% psychological, 20% methodical. It's all in the mindset, you know. Most of the time, you're not gonna be right. You know, the market it moves how it wants to move. It's like an anaconda. But if you just really gung ho on your destination that you got set on your GPS, you'll get to where you're going. So let me move to our last trade. I really want to share it. I'm glad I got to share it with you. Yeah, we're gonna go over this gold trade too. Legendary gold trade. We're gonna go over that. First, pull it up here. Excuse me. It's the last trade, y'all. We done. If you got any value from this video, be sure to subscribe, share it with a friend. I do not do one-on-one coaching. I don't plan on doing any one-on-one coaching, any mentoring. If it is requested, I will consider it, but that's not really something that I'm doing personally. I'm just focused on my own journey. I got a lot on my plate as it is. But by me sharing this video, maybe I could, you know, get somebody something to watch over and over again to help instill some principles in them to trade with, especially using this book. This book really helped me, like, by not only making this book, but actually purchasing the physical copy, waiting on it to come in the mail, reading it all the way through, highlighting it. It really helped me pass because I'm sitting, you know, in public places where I got downtime instead of me sitting on my phone. I'm reading a chapter out the book or a letter out the book, which is considered a chapter. I might read M, and it's about 3 or 4 pages, and it gives me a breakdown of a complete rule. And the best part about this book is like when I take a loss, it's crazy. It's like the next day after I take a loss, I'll pop open my book, and it'll be a rule that I should have actually took heed to before I took that trade that lost me that much money. Especially this one, Jay. Make sure you do not revenge trade. That was a big one in phase one. So when I took a loss in phase one and I read that, I read Jay the next day, I was like, man, I should have read that the day before. I wouldn't have lost so much money. But let me get back into the video so we don't have it over 50 minutes again. So this is our gold trade. This right here is I think it's a bearish order block, but let me verify before we go into depth. Yeah, I believe that was a bearish order block. Yeah, this was a bearish order block. I just had to check and make sure. So when I say bearish order block, that means this became a breaker order block once you broke above this. And this is what we was banking on. We was banking on price to break above this point, and it did, as you can see here. Now I did hold this trade for about like maybe 12 hours. So it wasn't just an easy trade, but after holding this trade, I was very profitable. I think we earned about 2000, what was it say, 1900, 1920. So this was our last trade. And the reason why we didn't earn the full 3% is because we didn't risk a whole 1% to earn 3% is because we only needed about $1,800 to $1,900 to pass the entire evaluation at this point. We're up, what, maybe like 3%. So all we need is around 2% or less, and we passed. And that's what we did. So we're gonna go over what I was seeing in this trade, starting with the pre-market analysis. Where do you see price action in the higher time frames? Hold on a second. Let me zoom out so you can see. Price is creating higher highs in the daily. Two, if you were to go with the trend, where? Bull. Are there any reversal candlesticks in your zone? Bullish engulfing in the daily. Where are two or more time frames in synchronicity with the trend? The daily and the 4 hour. Five, do I have a confirmation? We have fail swing and a Fibonacci. And as you can see here, it looks like the Fibonacci is headed towards a 0% extension. So whenever it gets to like the 50% level, you either shooting for it to get to the 0% or 100%. And if it gets to the 0%, there's also a 27% extension that you would like to see it get to as well. So it doesn't end there. Let me continue. Did I wait for a retest? Yes. What was your risk reward ratio? 1 to 3. How much did you plan to earn? $1,800. So all we needed was 1.8% to pass. So we earned it. Which session did you enter? Tokyo. Where's your stop loss? 2407.15. Where's your take profit? 2435.62. Why are you taking this trade? A bounce above bearish order block. So this was a bearish order block. And with this bearish order block break, it became a breaker bearish order block. Did you use any indicators, sessions? Give me 3 confluences: imbalance, fail swing, and order block. And I'm also, the very last thing I'm going to show you is the imbalance on the chart. But where's your entry? 2417.15 with a 1 lot size. Post market analysis. 1. Did I follow my plan? Yes. I allowed price to hit my TP. What did I do well? I allowed the trend to be my friend, which is one of our trading rules inside the ABC trading rules. The trend will always be her friend. Where can I improve in the future? Continue to wait for a confirmation. What did I learn? In victory, knowing to stop. My rules are in place for a reason. Did I prepare properly? Yes. Why did I take this trade? A breaker order block forming. 7. What is it you are seeing? An imbalance being filled, which I'm about to show you in a second. And where did you exit? 25, 35, 62. A profit of 1.8%, which passed us our entire prop firm challenge, and we are fully funded with a 100K account. So let me go ahead and show you the imbalance that I was seeing, which is here. So this yellow box here is the imbalance, right? Let's go to the imbalance. I took a trade a long time ago here too, and we profited. But you can see here there's two large impulsive candlesticks, right? This is called an imbalance. So what we're looking for in the future is for price to get back to this point. So it fell July 18th, right? It got back to this point the last day of June, right? It delivered. So this is another example of an imbalance. Price had to get back to this point. It was bearish for a while, but like I said, price got back to this point, and we were able to capitalize on it. So the imbalance played a major role in us earning, the $1,800 we needed to pass. Okay. Also, there was one more thing I wanted to go over with you all. That was actually the ABC trader rules. So let me pull that up, and then we'll be done. So in my notebook, I mentioned that one of my rules in my post-market analysis that is very important that I want to go over with you before I wrap this video up. Oh, the trend is your friend. So let me reference my trading rules. What I do is I write all my trading rules in the back. It's A through Z. I just write them down, and then I read them before I trade. And I also have them on my computer and on sticky notes, but they're not up right now. So anytime I'm on the computer and I don't have access to the notebook, I can just scroll through my sticky notes and read my rules. We're gonna go over letter W. So we're gonna go over W, and I'm gonna let you go. Okay. So like we did last time, you know what? For the sake of us only having a few trades, I'm actually gonna read the entire chapter because the trend being your friend is the most important thing in trading. If you're gonna make money, you gotta follow the trend. If you do not follow the trend and counter trend, you gotta know when to get in and get out. Because there's a such thing as counter trend trading, and I've been profitable with counter trend trading, and I have taken a lot of losses with counter trend trading. This is why I do not do it anymore, because I've been more profitable with trading with the trend than trading against the trend. It's like brushing your hair. If you brush your hair forward, you're gonna have waves. If you brush your hair backwards, you're gonna have BDBs. Okay, now let's read. W. Remember, the trend is your friend, my friend. In Jack's trading journey, he learned timeless wisdom of following the trend and let it guide his trading decisions, whether he was trading stocks, forex, or other instruments. Jack understood that the trend was a powerful force that could lead to profit or loss. By aligning himself with the prevailing direction of the market, Jack embraced the mantra that the trend is your friend and leveraged it to his advantage in his trading endeavors. Exploration. 1. Trend identification. Rule W underscores the importance of recognizing and trading in the direction of the prevailing market trend. The trend is a fundamental concept in technical analysis representing the general direction in which prices are moving over time. By aligning with the trend, traders increase the probability of successful trades and reduce the risk of trading against the prevailing market momentum. Riding market momentum. Number 2. Trading with the trend allows traders to capitalize on market momentum and collective behavior of market participants. Trends tend to persist over time, with prices moving in the direction of the dominant trend for extended periods. By riding the momentum of the trend, traders can capture significant price movements and maximize their profit potential, while minimizing the risk of counter-trend reversals. 3. Risk management. Aligning with the trend also contributes to effective risk management by reducing the likelihood of entering trades against the prevailing market direction. Trading against the trend increases the risk of losses and requires tighter stop loss levels and protect capital. By following Rule W and trading with the trend, traders can set wider stop loss levels and give trades more room to breathe, thereby reducing the risk of premature exits and maximizing the potential of profitable trades. 4. Confirmation and validation. Rule W encourages traders to seek confirmation of the trend from multiple sources, such as trend indicators, moving averages, and trendline analysis. Confirming the trend helps validate the trading decision and provides additional confidence in the trading setup. By combining trend analysis with other technical and fundamental factors, traders can make more informed and well-rounded trading decisions that align with the prevailing market conditions. Conclusion. Rule W. Remember, the trend is your friend, my friend. It emphasizes the importance of trading with the direction of the prevailing market trend. By aligning with the trend, traders can capitalize on market momentum, reduce risk of losses, and increase the probability of successful trades. The disciplined approach to trend following fosters consistency, confidence, and long-term success in navigating the dynamic and ever-changing landscape of the financial markets. Here are some quick and insightful tips derived from each trading rule that you can implement immediately. W. Remember, the trend is your friend, my friend. Always trade in the direction of the prevailing market trend to increase the probability of successful trades. Use trend following indicators and analysis to identify and capitalize on market momentum. Now, I'm going to mention this and then I'm out. There are two types of indicators. You have lagging indicators and you have leading indicators. Lagging indicators are created based on past events. Leading indicators are what you create based on what you currently see the market and the direction that it may potentially go to. So let me give you an example. Here we have. So a lagging indicator will be I don't even use indicators that much. So I don't even know if I'll be able to show you an example. Okay. So this volume profile is based on past events. So although that is showing that this is where a lot of buyers and sellers are meeting it, this is old data. Me creating a, let's say we see the overall trend here. What is that? So, okay, there we go. Us creating a trend line on our chart is a simple leading indicator. That's all that is. We see that price overall is bearish. We may want to take a short position here. It would have been able to capitalize it. Oops. Would have been able to capitalize on it based on market conditions. and would have been able to earn us a nice smooth profit off of our own indicator. But that's all I had to share with you today. If you enjoy any of the information that you got from this video, be sure to like, share, subscribe. Uh, I have this book here available at createart.com. You can go get it. It's only about $5, I believe. And if you click the link below, it'll probably be less than that. On the website, it's gonna be dirt cheap. You get the digital copy, you get the PDF file of the book, and if you like the physical copy that I have, you can always go on Amazon and order yours. It's like $9.99, I believe. They can reduce the price, so it's $9.99. Get it while it's $9.99 because it'll be going up to $14.99 pretty soon. And I'm giving you a lot of value in that book, for a very, very affordable price. And as you can see, as I've demonstrated in the past two videos, that it works. That's all I had to share with you all. Thank you for watching today, and I'm out. Peace.
I was chosen. I'm trying to buy the past out power and I was open. I'm grinding for this. I know I was chosen.